Welcome back. The next company on our radar today is Tracxn Technology. Now, this is a company which is a data and a software platform, but for private markets only and globally. So now the company will offer private company data to its customers. If you want to source a deal, you want to identify an M&A target for deal diligence, analysis, tracking, and for emerging themes across industries and markets. So if you are a VC company or you are an investor and you're scouting for opportunities, whether it's an investment opportunity, maybe another company is looking at M&A in another geography, you will go to Tracxn Technology and source all the private sector data and do your analysis and then identify a potential investment. So that's about the company. It listed a couple of, it's been a while since the company listed. Today it's down 1.8%, but in the last 1 month, it's up close to about, in the last 1 month, it's up 16%, and in the last 1 year, it's seen a gain of about 37%. In Q2, the company saw its highest quarterly EBITDA and EBITDA margins, and revenues too picked up 8.5% quarter-on-quarter, 12.5% year-on-year. Neha Singh, co-founder, CEO at Tracxn Technologies, is with us on the show. Neha, morning. Thank you for joining in. This is Reema here, and season's greetings to you. Talk a little bit more about the private sector market. We know 2023 has been blockbuster for the public sector market. Investors, companies are all queuing up on Dalal Street. Big money has been raised. But what's the private market outlook looking like in 2024?
Thanks a lot for having me, and season's greeting to you, everyone at CNBC, and all your viewers as well. In terms of 2023, so private market was probably one of the lowest. So the typical trend that we have seen is that the private market trails the public markets by about 2 to 3 quarters. And so this is how 2022 was for the public markets. So especially in the private markets, if you see, you would have heard a lot of articles, a lot of talk, everyone talking about funding winter, right, in the entire year, which was actually true also in stats, if you see. So, for instance, this year was down nearly more than 60% as compared to last year, and down more than 80% as compared to the peak of 2021. But the good news is that, the popular consensus is that the bottom up is behind us, and, things are rebounding. And there's a lot of dry powder waiting to be invested in the markets. And with the time and the valuations having corrected, and the companies having grown into those valuations, you will see a lot more activity going forward, than what was this year. So that is another tailwind that we are excited about in this market.
Neha, hi. Thank you for joining in, and season's greetings to you. So help us understand how this pickup will play out for your business. I mean, as deal activity, let's assume, working with that assumption that, another couple of months down the line, deal activity and inquiries start picking up, then what's the play in terms of top-line growth for you and even margins? Because the last reported numbers that we had, your margin profile improved quite a bit at almost 9.5%. So what kind of, opportunities throw up better margins for you?
Right. So that is correct. So we do enjoy from the tailwinds that this market is going to witness in the coming year, in this 2024. So that is one of the things that that is inherent, which is there. The second thing is that there's a lot of growth initiatives that we have also been investing in. For instance, the whole organic traffic. So today our pages get more than 17 million visitors every year, right? And that continues to sort of increase. A lot of other things that we are doing in the international market. So today, for instance, nearly 70% of our revenue is international. And we have continued to do a lot of initiatives to expand our coverage in those regions, be it like a country like the US, UK, Germany, Singapore, etc. We have a lot of customers there. So we are doing a lot of things in getting more regulatory data about private companies, going more deeper into those markets. We are doing interesting aspects like tying up with universities, because a lot of people that actually graduate, that come into our customer segment, be it private market investors or corporates, actually come from top 1,000 universities globally. So that's another initiative, that we have aggressively invested in. So that is one on the growth, and that is why we see that because of our growth initiatives as well as the tailwinds that we are going to see in the markets, we expect the next year to be much more than what the previous year was. So that is one on the top line. The other interesting aspect is also on the bottom line. So we are a profitable company. So we have profitable PAT, EBITDA, and free cash flow, and that continues to increase. Right. So even if you look at, our revenue has increased, but the cost has actually remained nearly same. And that is why you continue to see a margin expansion and a bottom line, your EBITDA and PAT expansion. So that is another interesting aspect. One of the reasons is that we continue to invest in technology. So technology is one of the key pillars. So earlier it was big data, machine learning. Today it's Gen AI. And that is one of the initiatives that we also heavily invest in. That is why we are able to produce data of more than 50 countries, private companies across all. Even though our revenue increases, the cost actually keeps getting optimized because a lot of automation that keeps happening. So excited to go into the next year, both from the top line and the bottom line, your margins increase and your EBITDA and PAT increase.
Got that. Neha, on the top line, can you give us some rough numbers to work with? I mean, your quarterly revenue run rate is between 18 to, I believe, 21 crores. That's been the run rate for the last couple of quarters. Now, if we are working with an assumption that private market deal activity really picks up in 24, then what could the quarterly run rate look like at an average? I mean, there'll be blowout super quarters and there'll be quarters where there's a lull, but I mean, an average run rate that you can hope to scale up to.
Yeah, sure. So today, for instance, we are at a run rate of total revenue of about 90 crores. That is growing in lower teens. If you look at it in the current year, historically, if you look at it, we have grown at nearly 30% CAGR, and we expect to go back to that level, hopefully by the end of the coming year.
Okay, you spoke about some initiatives which will help you scale organic growth traffic. Now, in FY23, you had inbound traffic of 9 million visits. In the first half, you've already done 8.7 million. Can you give us an updated number? How has Q3 picked up?
Sure. So these are, sales and marketing is one key pillar that we have been investing in. Within that, for instance, organic traffic is one big thing, which is actually free traffic. So you don't have to pay for this traffic. That's why even in our P&L, you don't see a large digital marketing line item. And that is because we are a data company. We produce a lot of content. So we have more than 2 million public pages, which we are going to actually scale it to more than 10 million very soon. That gives us huge amount of traffic. So anyone, for instance, is searching for like fintech companies in Sweden or shareholding pattern of a particular private company, or more details about an investor, they come across our pages. So this is one huge channel. Today, we are at a run rate of nearly 17 million visitors annually across all our pages. And that is one key initiative that we continue to increase. Right? Apart from the other things that we are doing is, the other thing that we are also interested in doing is doubling down on more data about private companies from a lot of regulatory filings. So, though it's a private company, they have to file financials, transactions filings, cap tables, labor filings, etc. Today, we track private company financials in more than 20 countries and shareholding in more than 20 countries. And these are all also including, say, non-English language filings. Right? So that is another area that we have sort of invested in because we see a lot of customer interest in these countries as well.
Neha, great conversation. Thank you very much for joining in, and wish Tracxn Technology and everyone at your company all the very best. We will slip into a very short break. We'll come back with more. Stay tuned.
CNBC-TV18, embarking on a quarter.
Thank you for watching CNBC-TV18, and do follow us on all our social media platforms for news, updates and more.